Good afternoon, and thank you for joining us for our webinar, HRAs in 2020, Everything You Need to Know. I'm Julia Goebel, Chief Marketing Officer at Benefit Express, and I will be your moderator today. Welcome. A few housekeeping items before we get started. If you missed something, don't worry. We'll be emailing you the recording with the slides after the webinar concludes. I'll be keeping the webinar muted to avoid any background noise. And we'll pause throughout for questions. Simply type your question into the chat box and we will read it aloud at the end of each section. If we don't get to your question today, we will be sure to email a response. Now to the topic. Today we will discuss the new HRAs coming in 2020, individual coverage HRAs and accepted benefit HRAs. These will include a detailed overview of each HRA and how they compare to traditional HRAs. And now for our distinguished speaker. ERISA attorney Larry Grugin is our presenter today. With more than 35 years experience in employee benefit law, Larry has a wealth of experience in dealing with qualified plans, health and welfare, fringe benefits, and executive compensation areas, to name just a few. We are delighted to have Larry with us. Thank you for joining us. And with that, I will now hand it over to get started. Take it away, Larry.
Thank you very much. I appreciate it. What I want to try to do today is, as Julie indicated, is do a complete analysis of what these HRAs are, what they do, why you should consider it, why you shouldn't consider it. And you see in the slide in front of you, things are we're going to be going over today. We're going to review what happened. Regulations were released. I'll be talking about those. And then I'll be doing a deep dive in what is an individual coverage HRA. This is extremely important. For the first time, any employer now, not just a small employer, can reimburse on a pre-tax basis individual coverage. So for those people that you offer an individual coverage HRA, you can give them a choice between group coverage and this individual coverage HRA. And I'll be going through the eligibility requirements. I'll be going through what you can and cannot do, and the notice requirements. Then I'll be going through the exempted benefit HRA. This is a different animal. And this one you have to, as an employer, you have to offer coverage, group coverage, that the employer doesn't have to take it. And then basically what this does, you can allow employees to be reimbursed for certain premiums, but also unreimbursed expenses. So this is like a health FSA, but it's employer contributions, and I'll be talking about that. Then I'll be talking about other provisions in final regulations that are important. Now, most important, what I'm going to be doing next is comparing these new HRAs with traditional HRAs and qualified small HRAs, because this can be confusing. There's various rules. These new HRAs are not simple, they're somewhat complicated. And I'm going to be talking about the tripwires as an employer you may want to consider before adopting one of these plans. And the basic question before you go and you adopt one of these plans, is it too complicated to administer? And is it much simpler as a small or medium-sized employer to just give cash to employees? That's the basic question an employer has to ask themselves. Is it too much work to offer these? And I'll be talking about that and some of the things you have to worry about in considering these new HRAs. And then I'll be finalizing this with comments and conclusions. What you should consider, what you shouldn't consider, and which employers may be considering these and which employees should be offered these. I'll be talking about that. Now, as Julie indicated throughout the presentation, we're going to stop for questions. So please look at the to your right there on the bottom. You can type in your questions and submit it, and then I will be stopping periodically. Consider your questions. So if there's anything that I'll be talking about that you want me to repeat or explain, please stop me, because I'll be willing to go through this. So let's get started. First of all, what happened? On June 13, 2019, the Treasury, DOL, and HHS released final regulations. And one thing to remember, these plans would be effective for plan years beginning on or after January 1st, 2020. So the first time you can offer these is January 2020. And as Julie indicated, they've created two new HRAs, the individual coverage HRA and the exempted benefit HRA. And these have specific rules that are different than other HRAs that I'll be going over and explaining and comparing against a traditional HRA. Now, as I indicated before, these HRAs, some parts of it are somewhat complicated. And again, you have to really consider whether you want to adopt these. There's some notice requirements, so I'll be going through those. So again, these new HRAs will be subject to COBRA and ERISA, but the individual coverage HRA will not be subject to the non-discrimination rules that generally apply to normal HRAs. And I'll be going through the eligibility requirements you have to consider. Now, just like regular HRAs, these new HRAs can only be offered to what we call common law employees, and they cannot be offered to self-employed individuals such as partners, more than 2% shareholders. So those rules still apply. So again, they cannot be offered to owners. So let's look at the individual coverage HRAs. Now, in order to be eligible to receive a reimbursement under these plans, employees and their dependents must be enrolled in individual health insurance before being eligible. So what you have to do as an employee before you're eligible for any reimbursement to show evidence that, yes, I have coverage. Now, as an employer, you have a choice of just reimbursing premiums, or you can also reimburse any what we call Section 213D medical expenses, which include medical, dental, vision. So they present evidence, just like any HRA, that they have an unreimbursed expense, and then you will reimburse it. Now, what's interesting here is that you, as an employer, said how much you're going to spend on this. So it's up to you. There's no limit on this. And this is something that you can then change as any other HRA from year to year. So you can set it very low or very high depending on what you want to do. But again, these individuals cannot be covered and cannot be offered group coverage. So individual coverage includes individual market coverage, whether offered through the exchange or not, student health insurance, grandfather and grandmother plans, but again, not group coverage and not exempted benefits. And what's interesting, and this is the first time this is possible, you could reimburse Medicare Parts A, B, or Medicare C premiums. So what's important here, for the first time, the governmental agencies are waiving the Medicare secondary payer rules. So no matter what size of employer, you can say to an employee, we'll reimburse you either individual coverage or Medicare. It's up to you what you want. Now, individual coverage excludes coverage under a plan of a spouse, short-term limited duration policies, healthcare sharing ministries, and TRICARE. Those cannot be reimbursed. So basically what we're looking at is that you cannot reimburse another employer's group health plan. You cannot offer those employees that you're offering this individual coverage HRA group coverage. Now, what you can do, and I'll be covering this in a few minutes, and understand this, you can offer group coverage to a section of your employees and then offer this plan to another section of employees, and those employees that you offer it to cannot be offered group coverage. So if you own a restaurant, for example, you could offer your managers a group coverage, and then your servers, your variable hour employees, this type of plan. So you can do that. And what's interesting about this, as long as you meet the rules, as I said before, the non-discrimination rules under the Internal Revenue Code do not apply. So again, an employer cannot offer an employee or dependent a choice between individual group HRA and traditional group coverage. So basically what you do, you take a group of employees and decide we're not going to offer group coverage to those employees, and you offer this individual coverage HRA. Now, what you also can do, an employer can offer such employee or dependent participation in a health flexible spending account or any other group coverage, for example, dental and vision. But you cannot offer group health coverage. And for example, you can offer them what we call a POP plan, pre-tax contributions to a cafeteria plan. And what the IRS said is that even if you do offer that, it will not be treated as if you're endorsing this individual coverage, and it will not be, the coverage underneath will not be subject to ERISA. Very, very interesting, because that's one of the factors in the past that the IRS used and the DOL used to determine whether the coverage was subject to ERISA. Pre-tax contributions, they've said specifically in the regulations, just because you offer pre-tax contributions doesn't mean that that underlying coverage is subject to ERISA. Now, an employee independent will need to substantiate each month that he or she is covered by a group health plan. Such substantiation may be either a document from a third party showing an employee independent has enrolled, or a statement from the employee that they are or they will be enrolled. As an employer, I would suggest in this situation, what you do is you ask for a bill from the insurance company just to make sure that they have coverage. So what they would do, they would pay for the individual coverage and then show you the bill, and then you would reimburse them for this. So to satisfy this requirement, agencies have developed a model form substantiating coverage and requesting reimbursement. What I would do is I would, instead of just taking a statement from the employee and or dependents, what I would do is ask for a copy of the bill. Just a statement from the employee I don't think is good enough.
So Larry, before we proceed, we've got a question from our listeners. First, David asks, can either of the new HRAs be used to cover a telemedicine benefit?
It's got to be individual coverage, and it's got to be minimum essential. It's got to be minimum value. Mm-hmm. So a telemedicine would not be good enough.
Okay. And then secondly, is there any legal exposure if an employee attests to having coverage, but in fact they do not?
Well, technically they're not eligible, and it could defeat and make the plan ineligible. So that's what I'm suggesting. Instead of just taking a statement from the employee that they have coverage, you as an employer get evidence. You get that bill from the insurer that it has been paid before you reimburse them. That's the only way I think an employer can protect themselves.
Mm-hmm. Thank you.
Now, the individual coverage HRA must be offered on the same terms to all members of an employee class. And you as an employer, there's 11 different classes that you can create. You can just offer it to full-time employees. It can be either 35 or 30 hours. You can just offer it to part-time employees. That's anyone working less than 35 hours or less than 30 hours. It's up to you. You can just offer it to seasonal employees. And again, that's a period of less than 9 months or less than 6 months. It's your choice. Employees who have satisfied, who have not satisfied a waiting period. So it's employees who have not satisfied a winning. That should be not there, I'm sorry. Non-resident aliens with no U.S. Source income. Salaried employees. So you can mix and match any of these situations. Other employees in a unit covered by a collective bargaining. Employees whose primary site of employment is the same rating area. Temporary employees, or any combination of those 10 previous you can do. So if a former employee are offered reimbursements and the former employee are treated as being in the same class as or immediately before the separation from service. So again, and what's interesting also is what the IRS said, those classes can vary from each member of a control group. So if your business has 3 different divisions, each division can have their own classification. It's not controlled on a control group, it's based on an employer group. That's extremely and flexible. So again, you can design the plan to be any of those combinations of 10 different categories. Now, the limiting part of this is the fact that a minimum class size requirement applies if the employer offers a traditional group plan to one class of employees and offers an individual coverage to an HRA to another class. So what they're saying is you cannot pick out individual employees and give them this. There's going to be a minimum class size. So if you have less than 100 employees, there's going to be at least 10 employees in that class. If between 100 to 200, it's going to be at least 10% of your employees. If you are more than 200 employees, it's going to be at least 20 employees. So some employers have asked, well, can I pick out individual employees and give them this? And the answer is no, because there's minimum class size. And for example, if you want to just offer this coverage to those employees that are eligible for Medicare, remember, you have to satisfy the minimum class size, and then you can't just say, well, you just get reimbursement for Medicare. You have to say you get reimbursement for Medicare or any other coverage. And if they pick Medicare, that's fine. So this is the limitation here that as an employer you should be made aware of, is that you just can't pick out individual employees and give them this. That's what's important to understand. Now there's permitted exceptions to the same terms requirement. What you can do, you can vary the HRA reimbursement based on age and family size. So you can give older workers more money, and there's a limitation: an older worker cannot get more than 3 times the contribution as a younger worker. Okay. And you could vary it for, employee plus child, employee, and vary it on the number of children. You can do that. So as long as everybody in the class is subject to the same benefit, and that benefit is determined on the family size, you can vary it. Participant can pay the difference on pre-tax basis under a cafeteria plan. And just like a normal HRA, any unused amounts allowed to be carried over. Now, the important is allowed to be carried over. You don't have to carry it over, but you can allow them to do so. And you could transfer amounts from this plan to a normal HRA. And you can adjust the maximum dollar amounts for to newly hired employees. So if you're hired after a certain date, you get less. If you're hired at July 1st, you get half of what everybody else gets. And employees can be offered a choice between HRA compatible individual coverage and an individual coverage that is not HSA compatible. So again, there's some choices you can make as an employer. You can design this. And what many employers in designing HRAs do, they indicate to the employees is that the contribution that the employer is going to make, it will vary from year to year. And you can do that. You can vary the amount of the contribution. You can decide 1 year to give everybody the same amount, or the next year announce at the beginning of the year, before the beginning of the year, that you're going to vary it according to age and family size. You can do it that way. Now, one of the stipulations, and this is the something that you have to watch as an employer. As soon as that individual is not covered by a group, individual plan, they're no longer eligible to receive a reimbursement under an individual coverage HRA. And COBRA is only offered if coverage is lost under an HRA because of the circumstance that would constitute a COBRA qualifying event. For example, somebody terminated employment, or they went from they went from full-time to part-time, and therefore they're no longer eligible. And what's important about this, if an individual comes to you and says that I dropped my individual coverage, that is not a COBRA qualifying event. So they just lose coverage. And the law says, the regulations indicated that you stipulate to the employee, if you lose coverage, you must provide us notice that you've lost coverage. So it's their responsibility. And again, it's your responsibility as an employer to require that every month that employee provide you evidence that they have coverage. And if they don't provide that evidence they have coverage, then they don't receive a reimbursement. Also, employees must be allowed to opt out and waive future reimbursements. And the reason why this is important, and this is a element that's in a normal HRA. If you as an employer, for example, provide coverage or provide a reimbursement, and you are a ALE, applicable large employer, and it is affordable, then that person is not eligible for the premium credits. But if what you provide, reimbursement you provide, is not affordable, and they still take it, they're not eligible for a premium credit. But if they waive it, and there's a document that they waive coverage for the year, and your reimbursement is considered not to be affordable, then they would be eligible for a premium credit. So this option of waiving must be offered at least once a year. A termination of employment, the remaining amounts in the individual coverage HRA must be forfeited, or the employee must be permitted to permanently opt out and waive any future reimbursements if you allow continued participation. That way, that person can continue to be eligible for a premium credit. So again, these are points that are can get complicated.
So Larry, clarification question. If the employee leaves the company, what becomes of the funds in the individual coverage HRA?
Well, the employee if they terminate employment, this plan is subject to COBRA, so they would have to pay a COBRA premium to receive it.
Okay.
So these are one of the situations that would be a COBRA qualifying event, termination of employment. Okay. So COBRA would apply. Now, one thing you must do every year, you must provide an annual notice to employees at least 90 days before the start of each plan year. An extended notice period is allowed for the first plan year, and the agency provide a model notice. Now, there's certain things that this model notice provides, all right, I'll be covering it in a few minutes, but 90 days before the beginning of each year, you have to provide this notice to the employee. For ERISA covered plans, this notice must be delivered electronically, and a sample notice is provided in the final regulations. This notice must alert the employee to, among other things, the terms of the individual coverage HRA, including the maximum dollar amounts, a specific individual or group to contact for additional information related to the individual coverage special enrollment relating to eligibility. And what they're referring to there is that you are hired by an employer, and that employer sponsors a individual coverage HRA. What the regulations indicated is the fact that that automatically allows you to buy individual coverage on the exchange. It's called a special enrollment right. So even though it's not annual enrollment on the exchange, because you're eligible for an individual coverage HRA, you're allowed to enroll on the exchange for individual coverage. So they will so this notice will notify you have that right. It will inform the employee of the right to opt out and waive future reimbursements, that the premium credit for coverage in the exchange may be affected if the employee opts out and waives, and the individual coverage is not affordable. In other words, you can be eligible for that premium tax credit. Now, again, the agencies have provided a model notice. I've looked at that model notice and changed around so it's more readable, but this is one of the notice requirements you, as an employer, you have to give out every year. Now, what's important here is the fact that if you sponsor an individual coverage HRA, one of the concerns, because the individual coverage HRA is considered to be an ERISA plan. It is an ERISA plan. You have to have a plan document, you have to have an SPD, you have to provide, in addition to this notice, what you must also provide is the employee an SPD, and you have to have an enrollment form and reimbursement accounts. Now, the issue and problem is, and the regulations address this, well, since the individual coverage HRA is an ERISA plan, is the individual coverage that me as an employee, is that going to be subject to ERISA? And the regulations indicated no, if one, the purchase of insurance by the employee is voluntary, the employer is not involved in selection of the coverage, the employer does not receive any consideration providing the coverage to employees, reimbursement for non-group coverage is limited solely to the individual coverage and does not consist of exempted benefits, and the employee is notified annually that the coverage under the HRA, the individual coverage HRA, it's not subject to ERISA. So that means that the individual, so that individual coverage stays individual coverage. Extremely important to understand. Julio, do we have any more questions?
We do. I have a question from Jennifer R. Jennifer asks, why would an HRA be considered affordable when it is not an MEC-MV health plan?
It's basically the individual coverage that the employee buys is going to be minimum coverage. Mm-hmm. So because the employee bought minimum coverage and what is offered on the exchange is minimum coverage, if the employer provides enough of a reimbursement, then that coverage is deemed to be affordable. And if the employer does that, then the employee is not eligible for premium credits on the exchange, and the employer won't be penalized.
Great, thank you.
Any other questions?
Not at this time. Let's proceed.
Okay. All right, let's go to the next plan. And these rules are slightly different. This exempted benefit HRA is, again, subject to ERISA, subject to COBRA, and this plan will be subject to the non-discrimination rules under the Internal Revenue Code. And the rules for this are slightly different. Now, there are 4 requirements that must be met for this HRA to qualify as an exempted benefit HRA. As one of the conditions, the employer group health plan must be available to the employee, but the employee can waive it. So to be eligible to participate in the exempted benefit HRA, such coverage is offered, but the employee is not required to enroll. So these rules are slightly different. And the amount that the employer can offer to the employee is limited in 2020 to $1,800. So unlike the individual coverage HRA, this is limited to $1,800. And the employer can allow any unused amounts to be carried over to the next year if you want. Now, the exempted benefit HRA can only reimburse certain medical expenses. It cannot reimburse premiums for individual health coverage other than COBRA coverage or Medicare. So it can reimburse premiums for exempted benefits such as dental and vision and short-term limited duration insurance. So this animal is slightly different. Here, you can reimburse dental and vision premiums, but the whole purpose behind this plan is, for example, if employees are complaining that the deductibles, the coinsurance is too high, you can give them a little extra cash to pay for those amounts if you have a high deductible plan. So this plan, you don't have to waive group coverage. This is a limited HRA, and it's limited to $1,800. Now, the exempted benefit HRA must be available in the same terms on all similarly situated individuals. A separate group of employees may be viewed as similarly situated based on a bona fide classification. And that classification can be based on full-time versus part-time, occupation, date of hire, geographic location, membership in a collective bargaining agreement, length of service, and current or former employees. But remember, and this is important to remember, is the fact that if you create a group, unlike the individual coverage HRA, that group that you offer this to must be non-discriminatory, and you must pass the non-discrimination rules under the Internal Revenue Code. So for example, you couldn't just offer it to the executives. You could offer it to full-time if there's enough lower paid full-time. So you got to be very careful in designing this. And I'm concerned about this because the fact the amount is so low, that whether it's going to be popular or not. Now, an employee cannot be offered an exempted benefit HRA and an individual coverage simultaneously. You have to pick one or the other that you're going to offer to employees. And just because you offer an exempted benefit HRA will not disqualify an employee from accessing premium tax credits. So it's just an additional benefit that the employer can offer employees, and especially if they're concerned with coinsurance and deductibles. That's the purpose behind that. So Julia, do you have any questions about the exempted benefit HRA?
You know, we've just received a question from Nancy C. Nancy asks, for clarity, the accepted HRA is not a group plan, is offered to all employees, and employer-paid contributions would be reportable?
No. It's a medical plan under ERISA. It is an exempted benefit, so it's not subject to healthcare reform. It's considered to be under subject to ERISA, but generally it's offered with a group health plan, so it's different than the individual coverage HRA. And again, the purpose behind that, if the employer wants to offer additional cash to an employee to pay for co-insurance, deductibles, that type of thing. So they want to give something to the employees to ease the pain if they, for example, if they move into a high deductible plan. Certain amounts will be then reimbursed. And again, it's up to the employer to decide what expenses are be reimbursed. They can define exactly how they're going to work this. And for example, they could have the individual coverage, the exempted benefit HRA just reimburse certain expenses. So it's additional cash. My concern about this plan is subject to ERISA. You have to provide an SPD and a plan document. And the question I have, and this is my conclusions, but I'll mention here, because the amount is so small, it's just something that the employer said, I don't want to deal with this. I'm just going to give my employees cash. It's easier. I'll just give them a bonus. I'll give them $1,000 as a bonus to pay for those deductibles. I don't want to, worry about a SPD. I don't want to worry about substantiating their expenses. So that's what I'm concerned about. I wish the amounts in the exempted benefit HRA was higher. That's my concern. All right, let's move on. This next section is other provisions from the final regulations. And again, the final regulations include other provisions designed to ease requirements of these HRAs. And again, if an employer, for example, adopts an individual coverage HRA and they hire an employee, that employee can then go to the exchange and say, I just got eligible for an individual coverage HRA. Now I have a special enrollment right to enroll in coverage in the exchange or through a broker. So that gives, so if it's outside the normal enrollment period for the exchange, it gives them special enrollment rights. The HRA offers counted for employer mandate purposes. That's the individual coverage HRA. The offer of an individual coverage counts as an offer of coverage for the employer mandate rules. Whether an applicable large employer offers individual coverage to full-time employees may face employer mandate. Well, again, it depends on whether their reimbursement is considered to be affordable. So as the exempted benefit HRA is not counted, the individual coverage HRA is. So under the premium tax credit rule issued as part of the HRA regulations, affordability is based on part on the amount that the employer gives the employee in this individual coverage HRA. And the IRS indicated they will probably release more guidance in the next few months in regard to the employer mandate rules for these individual coverage HRAs. Now, all these rules get real confusing. And the best thing to do is let's compare and contrast the various types of HRAs so you get some clarity in the fact of how these plans compare. First of all, let's look at which employers can adopt these plans. On a normal HRA, an employer can only have a traditional HRA if they sponsor a group health plan or they reimburse expenses of the spouse's employer. So you cannot have a freestanding HRA. A qualified small employer HRA, only those employers that have under 50 employees, and they cannot sponsor any group benefits at all, including dental, vision, health FSAs. So again, those employees that employers can sponsor a qualified small employer are very small. I mean, they have to be small employers and not offer any group coverage at all, including dental and vision, including health FSA. Individual coverage HRAs, any employer who does not offer group health coverage or an exempted benefit HRA for those employees who have individual coverage, medical coverage. So as an employer, you can decide, I'm going to offer group coverage to this group of employees, but I'm going to offer the individual coverage HRA to these other employees. With an exempted benefit HRA, just like a traditional HRA, you have to offer group coverage. So any employer can offer it, but they have to offer group coverage. The employer doesn't have to take it. The employee doesn't have to take it. And they cannot offer them individual coverage HRAs. Which employees are eligible to participate? The employer under an HRA doesn't have to offer to all employees, but they have to create a group that's not discriminatory, and you meet the non-discrimination rules under Code Section 105H. So you cannot offer a traditional HRA just to executives. Under a qualified small employer HRA, an employee of an eligible employer, and basically you have to offer it to all employees that are eligible. And as you see on this slide, these are the employees that can be excluded. Those employees who have not completed 90 days of service, employees who have not attained age 25, part-time or seasonal employees, non-participating employers covered by a collective bargaining, non-resident aliens. Any employee have met the requirements, they must be offered the qualified small employer HRA. Individual coverage HRA, and again, you can create any of the 10 different groups I've indicated. So a group of employees defined by the employer participating in the individual coverage, but cannot be eligible for group coverage or an individual coverage HRA. Individual cover exempted benefit HRA, a group of all similarly situated individuals, but again, the problem is you must pass, any group that you create, you must pass the non-discrimination rules under Code Section 105H. When are employees eligible to participate? Under an HRA, the waiting period cannot exceed 90 days. Under a qualified small employer HRA, when the employee is no longer considered excluded. Under a individual coverage HRA, their waiting period cannot exceed 90 days. And if the exempted benefit HRA can exceed 90 days. Which expenses can be reimbursed? Under an HRA, you can reimburse any Code Section 213D expense, but you cannot reimburse individual coverage, health coverage. So it's got to be you can reimburse expenses, but you can reimburse group coverage. Under a qualified small HRA, reimburse individual major medical insurance, but it's going to be individual coverage. And you can reimburse expenses, and there's a limitation of which you can reimburse under qualified small HRA. It's $5,150 for single coverage and $10,450 for family coverage. So it's either expenses or it can be individual premiums. Under individual coverage HRA, it can be either Medical expenses or premiums, you as an employer decide which one you're going to reimburse. Under a exempted benefit HRA, you can reimburse any 213D expenses, but you can't reimburse individual health coverage, Medicare, or non-COBRA group coverage. You can reimburse exempted benefit, for example, dental and vision. Short-term premiums you can reimburse. But again, as I indicated before, it's limited to $1,800, and that limit will then rise in future years. Must reimbursements of expenses be substantiated? In all these, the answer is yes. As an employer, what you want to make sure is if you sponsor one of these programs, the employee presents evidence they've actually incurred the expense. They don't have to pay for it, but they've incurred the expense. So each one of these is exactly the same. You must present evidence the fact you've incurred the expense. Can amounts be carried over to the next year? And the answer for all these plans is yes. Again, you as an employer don't have to allow it, but you can allow them to carry over this. Are benefits plans subject to ERISA or COBRA? Under a HRA, the answer is yes. Under qualified small employer HRA, they're subject to ERISA but not COBRA. And the individual coverage HRA and the exempted benefit HRA, they're subject to both. So again, the complexity is there. What notice and disclosure requirements must be provided to employees? Under an HRA, you have to provide an SPD, an SPC, and other notices. Under a qualified small employer HRA, is subject to ERISA, so that you must provide an SPD, but you also have to provide a special notice 90 days before. Under a individual coverage HRA, you have to provide an SPD and a special individual coverage HRA notice. Under an exempted benefit HRA, you have to provide an SPD. Must employees be allowed to opt out? Under an HRA, yes. Under a qualified small employer HRA, no. Under a individual coverage HRA, yes. And exempted benefit HRA, no. What non-discrimination rules apply? HRA is subject to the 105H non-discrimination rules. Qualified small employer HRA, as long as the plan is offered at the same terms to all eligible employees, no non-discrimination rules apply. Individual coverage HRA, as long as you offer to a designated group or class and you meet the requirements, no non-discrimination rules apply. The exempted benefit HRA is subject to the non-discrimination rules. All right, comments and conclusions. So the first thing I'm concerned about, are these new HRAs too complex for employers? As I commented before, especially for the exempted benefit, is it going to be easier for employers just to offer an employee a taxable bonus? I don't have to, I don't want to give out an SPD. I don't want to give out a special notice. I don't want to substantiate expenses. Here's the money, you spend it the way you want. That's what I'm concerned about. Which employers may use them? Well, an employer, because of the tight labor market, may want to offer these plans to temporary and variable hour employees. Offer a group health plan to a certain segment of the population and offer these plans to other employees. Useful in industries where group coverage is maybe not offered and the employer wants to give them something to attract employees. That's something you may want to consider. So my concern is there a market for these HRAs? Has the government made this too complex to be useful for small and medium-sized employers? That's what my concern is. And one of the emphasis and one of the big things that the regulations talked about here is that what they're trying to do is bolster the individual market. Well, the problem is after years of attacking the individual market, many areas in the country just have one insurer. So the choices that employees have in certain areas are pretty small. And when there are choices in several insurance companies, the problem is many of these individual coverages have limited networks. The coverage is not as good as group coverage. That's what my concern is. So pushing employers and pushing employees to individual coverage may not be a great solution right now. That's what my concern. Are there any final questions?
Thanks, Larry. We do have a couple of questions. I want to share one from Jennifer R., who asks, I'm still interested in the affordability of the individual HRA. How would the employer report that on the 1095C? So if an employee received a PTC, the IRS would see they were offered an affordable HRA. Would
Correct.
these just be taken care of during appeal only, or?
No, this would be reported. This would be reported on the 1095C that they offered affordable coverage.
Okay.
So if an employer offered an individual coverage HRA and the employer indicated that the premium that was paid was the proper percentage, the employer can report to the IRS that yes, the employer was offered coverage, and that coverage was affordable.
Mm-hmm. Mm-hmm.
So I mean, so that's something that's extremely important for employers to understand. If an employer says, I don't want to offer group coverage anymore, I want to offer this individual coverage HRA, it's fine. They can do it, but they must meet the requirements of the individual coverage HRA and make sure that the employees have individual coverage every month. Will employers want to do that? That's my concern.
Thank you. Question from Beth E. Beth asks, have certain states made rules that make these options difficult or impossible to offer? For example, California.
I know. California has a particular rule on that. I haven't seen other states do it, but again, these rules are effective in 2020. So let's see if other states move to ban these plans or limit these plans. But please understand that if you or one of your clients wants to offer one of these plans, you have to get going pretty quickly because the first notices have to be distributed by early October 2019, unless they created a special exception. Now, all the forms are out there, the notices are out there, and this is something that can be, again, offered pretty quickly. But again, if an employer wants to pull the trigger on this, they just have a month or two to make a decision and start communicating as soon as possible on this.
Great.
Any other questions?
That wraps up our questions for now. If there's any lingering questions, this would be your opportunity to ask. And if not, we'll be providing the slides as well as the recording after the webinar concludes. Watch for this in the next business day.
In the next few days, I'm going to give Julia, and she will distribute to all the attendees. I'm creating a chart. I know it was tough to go through all of this all at once, but I've created a chart that compares each of these features with each of these separate HRAs. So you'll have a 1 or 2 page chart that goes through all the differences, okay?
Terrific. Thank you, everyone, once again for joining us. We appreciate your time, and we certainly appreciate Larry walking us through this important topic.
Take care. Bye-bye.
Have a great afternoon.